Welcome everybody to BackNine's webinar on long-term care solutions for every scenario. My name is Ilana Fox. I am the long-term care brokerage director here at BackNine, where we work hard at offering you a simple and easy process to insure your clients. A little bit about me. I have been in the long-term care solutions planning market for over 15 years. And what has remained constant is that it keeps changing. The carriers know that long-term care is a real risk that they will need to be accountable for. So they keep redesigning what they're willing to offer. I am looking forward to sharing with you what I have learned in our long-term care insurance world, very plausible answers to help your clients address their needs and concerns regarding their long-term care planning. So let's start out with, what is insurance anyway? Your clients work hard to earn their living and create their retirement. Hopefully they've done a good job of creating a savings. What I want to share with you today is my easy, non-invasive approach to what is insurance. I have found it to be effective and a great way to start the conversation and even position yourself for cross-selling. So I start out with drawing a diagram of each insurance product line to help protect your client's earnings. We start out with the basic, do they have health insurance? Do they have the minimum, or have they done a better job with greater insurance? Do they have car insurance? Do they have just what is mandated by the state, or do they add additional coverage? I asked, have they protected their income? What if they were too sick or injured to work? Do they have that protected? This will position you for starting the discussion on disability insurance. I asked, do they have life insurance? What's the purpose of life insurance? Do they have term? Do they have permanent? Again, you've now positioned yourself into another discussion. And do they have homeowners insurance? If they own their home 100% and the bank didn't mandate insurance, would they still have homeowners insurance? Once they've discussed with you all that's available, you are now positioned to say, are you thoroughly protected? Because there is an open line at the bottom where all their savings can be drained out. The line is, the barrier for protection is long-term care coverage. Now you've done your due diligence in thoroughly protecting your client. So let's take a look at the risks involved with long-term care. If you notice the red dots, look at 1 out of 1,200 have an event with a fire. Regarding the car, 5 out of 1,200 deal with a car claim. With hospitalization, 105 out of 1,200 have something significant to require medical coverage in a hospital. And then the odds of needing long-term care once you're past the age of 65 are 720 in 1,200. Long-term care is a huge risk. The paradigm has shifted. Why has it shifted? It has shifted because there's longevity, because there's the advancement of medical care, and the cost of care keeps increasing, at least at a 5% compounded rate out in assisted living facilities and a 3% compounded rate within your home. Why is that? There are so many baby boomers, 10,000 a day are turning 65, which is outnumbering those available as caregivers. So how can we address the need for long-term care? There are several types of insurances available to us. Let's take a look. There's traditional long-term care, which gives great tax advantages for somebody who has a business, and it's 100% customizable. There's life with long-term care, which will give guaranteed usage. What's not used for long-term care will go to the beneficiaries. And then there's asset-based products, which basically repositions existing assets and leverages highly towards a long-term care event. Let's start with traditional long-term care. It's 100% customizable. Premiums are tax deductible, so it's a great product for those who are self-employed or have an S Corp or a C Corp. There are various inflation protection options to keep up with the cost of care. Immediate in-home care is available so that there is no wait time between receiving monies. If they need to move to a facility, care can be received at home first, and those days of 90 or 100 days, whatever they've created in waiting for a long assisted living, can be used, so there's no out-of-pocket expense. And then there's shared benefit pools available. So when you think about the odds of needing long-term care, if you have a couple, two people accessing two pools, you've now just created the availability of money and the reality that one, if not both, will be accessing both those pools. So with traditional long-term care, you have the ability to create an extremely personalized, customized plan for your client's needs. In this slide, Customizable Plan, you can see how you have the ability to really get to know what your client is concerned about. At the top of the wheel, are they concerned about keeping up the cost of care? Do they want the insurance product to cover the care 100%, whatever might be the inflation rate in the future? Are they concerned about having this paid for and done with? Would they like a limited or a single pay product? Do they have a business that they can use the tax advantages and write it out of the business? Are they very concerned about long-term care but don't have any liquidity? Do they need to use money from their retirement plan? Some of my clients want to live outside of the United States, so they need a cash plan. Is your client one of those? Do they need the ability to have international coverage? If they are a couple, and that doesn't mean just married, if two people share a household, would they like the ability to share their benefit pools? Some people are very concerned about who will give them care. They want to have 100% availability of maybe even a family member, or maybe they want their housekeeper. So they want to be able to have an informal caregiver available to them, not just from a licensed agency. And then there are those who say, what if I never need long-term care? There are those who want a death benefit available if the long-term care is not fully utilized. So let's take a moment to look at that concern. How do you address that concern? You combine life with long-term care. So basically, you take the death benefit and you make it a benefit pool, not just a death benefit. The long-term care benefit becomes dispersed from the death benefit dollar for dollar. Your client will always receive a benefit. This is guaranteed usage, either for long-term care, and if not needed, it passes on to the beneficiaries. And in addition, not only does it need to be just an individual, you can put a couple, second to die, on this type of product. So let's take a moment to look at how this long-term care rider works. Your premiums, their premiums, buy a benefit pool that can be used either for life or for long-term care. There is a percentage of the death benefit pool that gets accelerated monthly, 2%, 3%, or 4%, which is decided at the time the policy is created. Any portion of the benefit that has not been accelerated as a long-term care option is then left in the pool and is sent to the beneficiaries. For example, let's look at a woman, age 55. What are her needs? What are her concerns? She is concerned about leaving something to her children. She's also concerned about how is she going to take care of a long-term care event. What does she have? She has a nice retirement plan. She has other investments. And what does she want? She wants to protect her assets against potential long-term care. So what are we going to do? We are going to create a universal life plan that we want to have, she would like to have paid up within 10 years, creating $750,000 death benefit, but wants it available to be used for long-term care. So 2% of that $750,000 will be made available if she has a long-term care situation. So let's look at this. Her premiums are just under $15,000, $14,871 for 10 years. So she spent $148,710 to generate a $750,000 benefit pool that can be used for long-term care, and when it's not used, remains as a death benefit. Because we've created a 2% monthly benefit amount, she will have up to $15,000 a month available for her long-term care needs that will last 50 months. And what's not used for long-term care gets transferred tax-free to her beneficiaries. There's also the asset-based long-term care, which we had mentioned a couple slides back. So what's the difference with asset-based long-term care compared with life with long-term care? Asset-based long-term care products leverage assets by repositioning existing monies. Let's take a moment to look at this. First of all, it's easier underwriting. And qualified money can be used. There are second-to-die policy products available. You can add an unlimited lifetime benefit, long-term care benefit rider. If that is more than your client needs, you can add a death benefit doubler rider. And inflation protection options are available. So let's take a moment and look at a specific case. Mary, she's 65. She has $250,000 in an annuity with $100,000 in gains. So what we're going to do is we're going to do tax-free leverage for her long-term care by taking $100,000 and putting it in a product that will give her $354,000 for her long-term care needs. It will last 6 years, and it will have available $5,313 a month for those 6 years. But what if she never needs the long-term care? She has created a death benefit more than the premium. And if she changes her mind in the future, the $100,000 is available to be returned to her in full. Maybe your client has so many health issues that none of those three, traditional or life with long-term care or asset-based long-term care is an option. Annuities is another approach for long-term care. It's the easiest of all the underwriting. You can have a second to die, and the income from that annuity, if you are in a long-term care situation, will double. So there really is only one question you need to ask your client. Does it make sense to use an insurance product to cover some or all of their long-term care needs? Because the reality is, if they haven't allocated any money to long-term care insurance, they have in essence allocated all their money for their long-term care needs. My name is Ilana Fox. This is my phone number and my email. Please feel free to contact me with any of your questions. I hope you found this webinar useful. My intent today was to share with you that long-term care is a serious concern your clients have, whether they've articulated it to you or not. There are multiple ways to address their concerns, so please don't leave your clients unprotected. Feel free, as I've mentioned before, to give me a call, and together we will find a solution to solve this problem. Take care.